This year, we've angled our political risk outlook to the oil and gas sector to analyze some of the primary issues impacting energy companies in 2018 and beyond. Recovering prices and the US oil boom have seen the heaviest Capex investment in new upstream operations go stateside. As a result, companies with investments skewed towards the US are reducing their overall above-ground risk exposure to volatility abroad. Globally, the picture is different though. Data from our Government Stability Index tells us that the stability of many producing countries with flows of upstream oil and gas investment is going to worsen by 2021. Chief among these are markets straddling the high-risk category of the index, including Russia, Kazakhstan, Egypt, Uganda, Kenya, and Ecuador, while countries such as Algeria, Vietnam, and Colombia are also likely to see a deterioration in political stability. We don't necessarily see this ending in coups or significant political upheaval, but oil and gas operators may see their exposure to a less predictable above-ground risk environment increase. Arbitrary decision-making, possible measures to buy off key stakeholders, or an inability to pass regulatory reforms will be the main risks to the smooth delivery of Capex projects in these countries, as their governments seek to solidify and maintain their influence. In the geopolitical arena, we see the standoff on the Korean Peninsula and the ongoing Cold War between Saudi Arabia and Iran as the only two geopolitical flashpoints with realistic potential to impact oil prices if they escalate in 2018. According to our interstate tensions forecasting model, outright war in either region is unlikely, despite an increase in the probability of a military incident or show of force between the US and North Korea, which has increased from 36% to 56% since the start of 2017. The likelihood for a direct militarized dispute between Saudi Arabia and Iran is lower at 26%, but a continuation of their regional war by proxy is expected in the Middle East primary conflict zones, Syria and Yemen. The full report will give oil and gas companies a 360 degrees view of the political risk issues impacting markets, exploration and production, and the move towards renewables and a low-carbon environment.